Joining me now, ARITA Chief Executive John Winter and also the Director of Insolvency firm RMG Partners, Purchas, are with me now. John, first to you, the end of JobKeeper, does it really mean it's inevitable now that more businesses must go broke?
There's no doubt about it now, Ross. I mean, we're facing 1 million people who are still on JobKeeper, just like the hotelier that we just heard from. Those businesses have been being propped up by that salary subsidy that's been coming in. The reality is that so many small businesses, and it's particularly small businesses, are going to face that challenging environment where that loss of revenue, the offset to their already diminished revenue coming in, is going to be taken away. And those business owners are going to be making hard decisions, not just about reducing their staff levels, but their very viability in the coming months.
Well, Ian, only in the past week or so that you have become you've gone in as administrator to the George Gregan chain of coffee shops. When you came in, you said that it was the end of JobKeeper, which really was one of the nails in that business's coffin. But there are so many others around the place. I mean, your business, for example, has analysed the retail sector over the years, and you say that there's a whole bunch of new failures coming in that area.
Well, there's no doubt about that, Ross. And JobKeeper is only one of the issues, I think, that came into play. They also had issues with the code of conduct coming off at the end of this month on leases and retail space. And with a business, there's a lot of wheels in motion, and a business owner needs to have those wheels all moving in the same direction at the same speed. Now, when there's a spoke in one of those wheels, such as having no customers, then you're going to have issues, obviously, being able to pay your costs. The stimulus that's been in place for the last 12 months has been fantastic, and the fact that landlords have had to mediate with their tenants has been great for business. But at the moment, when they're both coming off at the same time, it's a perfect storm for those businesses, particularly CBD, retail and hospitality, because those spaces have been empty for such a long time.
OK, so John, what could have the government done better than it has done? I mean, clearly JobKeeper had to end at some point. As we've indicated, it's put $90 billion into the community. We know that there's been criticism that some big companies have taken JobKeeper when their profits have gone through the roof. Could have it, in hindsight, been better targeted, better directed?
Look, I think it's realistic that it's got to come off. There has to be an end to the subsidy, and we have to adjust to the new market normal. The reality is that there's going to be a lower level of demand in the economy for some time to come, and that does mean there has to be a downward adjustment in the size and the number of businesses. And indeed, Ross, as we've spoken about before, we know that we're running below the average level of insolvencies. We are at 60% of the baseline of insolvencies pre-COVID. So there's about 4,000 or 5,000 businesses that would have gone broke during this period that haven't. Those businesses have been propped up and kept going. So I think that overall, the government's done very, very well. We've had plenty of time for businesses to adjust to what's coming, and I think there does come a point where we simply have to move on this.
OK, so Ian, when you walk into a business and you suddenly have to become the administrator, tell the staff that maybe there's no job, all that type of thing, it's obviously a very emotional time. But as John says, there's not been a lot of that going on over the past 12 months or so. Now do you expect that there is a flood of new work that's coming for you that's really going to basically, if you like, make those conversations with business owners and with their staff, all the more frequent over the next 12 months?
Well, I don't think there's any doubt about that, Ross. There's an enormous amount of pent-up debt out there in the economy when you think there's something in the order of $40 billion outstanding tax. And ordinarily, the tax office would have been the instigator of a number of these insolvency appointments. That hasn't happened in the last 12 months, and from what I understand, there's only been a handful that it's happened. So there is an enormous number of pent-up debt, as I say, and those owners are going to come and see us. But the problem is that we find is that they don't act soon enough. And the old adage of stitch in time saves nine couldn't be more apt in this case, is if a business owner does see they're having problems, they really need to speak to their advisor and go and see a well-qualified insolvency practitioner to talk about the alternatives that are available. And legislatively, there are things in place to help business continue to trade. And that's what I really encourage businesses to do, to have a look at what's going on in their balance sheets and their P&L and speak to their advisors and speak to a well-qualified insolvency practitioner.
OK, take me back to the George Gregan coffee shops. I mean, it's a high-profile business. At one stage, there were 30 coffee shops around Australia. It looked like a business with, shall I say, some momentum. The other thing as well is that serving coffee is one of the highest margin businesses, if you get it right, that you could possibly have. So what went wrong in that business that basically meant that you had to walk in as the administrator?
Well, the director of that business has been for some time watching and being concerned about JobKeeper and code of conduct coming off at the end of this month. And I think she's done the right thing in planning and working out what it is exactly that she needs to do. She has spoken to me recently about what might happen. I think there was an expectation in the business community that the code of conduct with leasing may have been extended. And dealing with landlords is not always easy because they have their own business plans and people to deal with. So I do think that there is an enormous amount of business decision to be made by company owners, business owners, particularly small business owners, to come to this decision very quickly. Can I just say that with all the wheels in motion and the things that a business owner needs to consider, that it is really important to have their records and their accounts and their books and records up to date.
Indeed.
And the number of people who come to see me and I say, could I have a look at your last set of accounts? And often they're not up to date, usually sometimes 2 or 3 years out of lapse since they've been done. And it's very difficult for someone in our position to advise them what is the best way out without those accurate records.
And John, just finally, I mean, those 4,000 to 5,000 businesses that you imagine are going to go broke in the foreseeable future. I mean, quite clearly there are jobs on the line. Treasury says maybe as many as 150,000 jobs could be lost. Does that equate with where you think maybe the unemployment effect of these company closures could come from?
I think from what we're seeing out in the market, certainly from speaking to advisors across the marketplace, Ross, I think that 150,000 is a little bit conservative. I think it's likely to be higher than that. There's no doubt that JobKeeper and the amount of cash that's been added in through various stimulus has left a lot of businesses flush with cash. It's a very unusual situation. Credit managers are actually saying that the environment for them is one of the best they've ever seen. But once that does start to come out, there's no doubt we're going to see quite an acceleration, and we expect it's going to pick up from about 3 months from now and will rapidly rise over the course of the year.
John Winter, Purchas, many thanks for your time today.
My pleasure.
Thank you.